Hello, I'm Grace. The $1 exchange rate broke through 1,551 during night trading, reaching its highest level since the global financial crisis. Volatility peaked as the currency surged past the 1,561 mark during the session. In the non-deliverable forward (NDF) market, the rate closed above 1,559 higher than the session closing price. This indicates strong expectations of won depreciation among non-deliverable forward market participants. The sharp decline in U.S. semiconductor stocks spread fear across global financial markets. As funds moved heavily into the U.S. dollar, a safe haven asset, the value of the Korean won fell rapidly. Strikingly, the exchange rate soared despite a record current account surplus. Capital flows are now prioritizing trade balances, defying traditional economic theory. This trend is driven primarily by Federal Reserve interest rate policies and global risk aversion. Anticipation of Bank of Korea rate cuts, coupled with sustained high U.S. rates, fuels won weakness. The 1,561 mark acted not just as a number, but as a significant psychological resistance level. Breaking through, it has further intensified upward momentum. For ordinary citizens, rising import prices and increased costs for overseas travel are direct impacts. Won depreciation may drive import inflation, increasing pressure on overall price stability. While export firms gain competitive advantages, their import cost burdens are growing. The slump in major exporters like semiconductors is expected to create mixed impacts on corporate earnings. If the U.S.-Korea interest rate differential persists, won weakness is likely to become entrenched in the short term. Global capital flows remain directed toward U.S. assets. Although the Bank of Korea might intervene in the foreign exchange market, this is not a fundamental solution. A cautious approach is needed, focusing on stabilizing market sentiment. There are growing concerns that structural uncertainty is expanding beyond simple exchange rate fluctuations. Volatility levels reminiscent of the global financial crisis are raising alarms. While maintaining the 1,561 range looks likely in the short term, further rises cannot be ruled out. Clarity on U.S. interest rate policy is needed to ease market anxiety. Citizens are likely to remain sensitive to exchange rate changes for some time. Strategies to diversify risk and pay close attention to foreign currency asset management are required. Economic authorities must implement policy responses that balance price stability with financial market stability. Strengthening internal defenses against external shocks is urgent. A thorough analysis of global economic trends and U.S. economic indicators must precede future actions. This is a time for proactive policy preparation, not just reactive measures. The sharp rise in the exchange rate exposes vulnerabilities in the Korean economy while offering a chance for structural improvement. Fundamental solutions for sustainable economic growth are needed. Transparent information, sharing, and communication should be strengthened to stabilize market participants' sentiments. Creating an environment for rational decision-making amidst uncertainty is crucial. Ultimately, stabilizing the won's value requires harmonizing global economic trends with domestic policies. Wisdom in preparing for volatility through continuous attention and analysis is essential. I'm Grace, thanks for watching.